Good morning, good afternoon, or good evening, depending on your perspective on the world. Whoops, sorry there. Recording just went on there. Sorry about that. I forgot to turn it on. I'll try it again. So, good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome to the Trading Coaches Playbook. My name is Brandon Wendell. I'll be your host, instructor, slash guru or guide for the next hour or so as we go through some of this material. So, good afternoon, everyone. Need to just real quick before I forget, I'm going to turn my mobile phone off of vibrate so it doesn't shake the desk and disrupt everything, because it will. It's been busy this morning. So have I. It's always a good thing, though. So I want to welcome everybody here. Before we get started, I put the bow tie back on. Figured why not? Everybody's been asking about the bow tie. I haven't had it for a while, so I figured to throw it on there for you guys as a special treat. I like wearing them too anyway. So it is a little warm here today, but I'll deal with it. Anyway, so good morning, Helen. Good afternoon, Kevin. And before we get started, just need to remind everybody that we are not registered broker dealers or investment advisors. I'm going to take a look at different securities for the purpose of our discussion and for the strategies we're discussing, but I'm not giving any recommendations to buy, sell, or hold any of these securities or strategies. And fix that. There we go. Not telling you to buy, sell, or hold anything in particular. There's always risk involved when it comes to the markets. You can never eliminate risk altogether. You can just reduce it, and that's what we're going to talk about. And free management partners personnel not subject to trading restrictions, so I and others could have a position in a security and initiate one at any time. That being said, we got a lot of opportunities out here for you. Actually, this is an old screen, but many of the programs are still out there as far as our premium programs and E-mini Think Tank. That's actually the E-mini Think Tank I am very active with. I'm going to escape out of that anyway. I was actually doing some of the numbers here for the E-mini Think Tank and just tallying up how we did so far for the year. Might as well share that with you. We'll put out a link for the E-mini Think Tank in a little bit. If you're interested in joining us, you can join in a couple of ways. One would be on a month-to-month basis where you just go ahead and subscribe and you pay monthly, or there's a quarterly subscription that's also available. You go per quarter, you get a little bit of a discount. And we meet up live 3 days a week on Mondays, Wednesdays, and Thursdays to discuss trading the futures markets and seeing the opportunities that are out there. So I've put out trade ideas every single session we get together. And you can see that every month I put out quite a few. It's the latest one, I guess, was September. We only had 40 ideas for that month, but there's a lot the rest of the months. And overall, been doing pretty well. You can see our average win versus the average loss. And it's not quite where I'd like it to be. I'd like it to be 3-1 for the average win to the average loss. We're about 2-1 right now, unfortunately, but our win rate is very, very high. So that helps. And we're going to talk a lot about risk management. You can see that the average profit per month. There we go. So thank you, Sean, for putting out. You put out the host and panelists only. Put that out to everybody. So good. There we go. Perfect. So there's the link if you're interested in learning more about this. But you can see the average rate of return. And if you had $15,000, what your rate of return would be year to date so far. We still have another month to go. So haven't had a negative month since the program started about 2 years ago. And I'm really enjoying doing it. So I'll go over that a little bit more. But first, let's talk about risk management. And I'm going to bring up the Dow here to kind of help me out. I'm going to clean this chart up. Now, risk management, I've mentioned this before in a previous workshop that we did. Basically, I was showing you that I think it was called Tuning the Risk Radio. And I did that as a workshop. You can go back to our YouTube channel and find the old videos of these Trading Coaches Corners. Or playbooks, sorry, Trading Coaches Playbooks. And if you go into that, I basically said the only thing that's within our control when it comes to the markets is how much loss we're going to have if we are wrong. So we can control our risk, but that's all we really control. And the way we control it is actually through 3 different things. The first, I'll just type in here, risk management. That's really what it is risk management, right? So in order to control that risk, we have 3 different things. We have size, and that would be the type or number of shares or lots or contracts, excuse me, that you're trading. Excuse me, a little tickle today. So we can change the type of what we're trading, especially in futures. Sorry about that. I had to mute the mic for a moment. Anyway, in futures, we can change the type of contracts we're trading. We can trade minis, micros, full-size contracts, whatever it is you like. Same thing when it comes to lots in Forex, you can trade mini lots, micro lots, full size standard lots. And in size, when it comes to shares in stock, you buy as little as 1 share. Actually, there's fractional shares now. So you even have a little more flexibility there as well. So a lot of opportunities out there to kind of manage your risk in the way that you see fit. Adjust that. There we go. Anyway, number 2 is going to be duration. And duration is the length of the trade. Say position, and that's a function of the charts used. Basically, you're looking at if you use a 15-minute chart or daily or weekly or 240, the higher number you go to, the more risk you're going to have, because you're going to be in the trade longer, and therefore your rewards and your risk is going to be a little bit larger or smaller, depending on how long you stayed in this trade, right? Let me fix this real quick. Come on. There we go. And then finally, with the risk management, this brings up the menu again. There we go. We're going to be looking at frequency of the trades. And that's the number of trades you take. If we're very selective and take very few trades, type of number. Yeah, type, it should be have. Yeah, you're right. It should be and. Thank you, Barry. Type of and number of. That's what it should be. Yeah, exactly. So anyway, the number of trades taken, if we're not very selective, we take every position that comes along, we're likely to take some bad positions. But if we're a little more selective in what we take, then we're likely to take better opportunities only. So that's the frequency. And again, you can go back and review that video. I don't remember exactly what it was, but I do know it should be available, like I said, in the YouTube channel for Wealth Builders HQ. So, excuse me. Asthma problem today, allergies. So when it comes to risk management, what we're going to talk about today is scaling in and scaling out of positions. And we're going to really be focusing on size, because that's what it comes down to, is the size of the position that we want to take and how we can actually adjust the risk according to that size and how we get into the position. So, actually, let me bring up Paint. Start doing my drawing here a little bit. And when it comes to zones, because remember, I always look at zones to buy and zones to sell. So if I'm looking at a zone at where to buy, I should have an area that we call a demand zone. And the same will be true for the supply zones. It doesn't make much of a difference depending on whether or not you're buying or selling, obviously. The supply zones work the same way as the demand zones. Basically, we have multiple opportunities to enter and adjust our size. You as a trader need to figure out, okay, I'm going to be getting in at a certain point. What is the amount of risk I'm going to be taking for this position? Be it $100, $500, $1,000. It's up to you, right? And everybody's a little bit different. So we all have different risk tolerances that we're willing to take and feel comfortable with. So what we need to do is figure out, okay, actually, let me take a step back. The other thing we need to do is evaluate the position. Yeah, it does look like an iron condor setup, doesn't it? I need to be doing some of those actually for today. I forgot all about that. I got my setup for this afternoon. It's another program I run called the SPX Cash Flow Secrets. Anyway, getting back to this, what we're looking at is when we get into a position, or before we get into a position, we should plan out everything we do. Oh, there we go. There's a link for that too. I got a lot of programs I run. I don't want to confuse everybody, but so basically, before we get into a position, we need to identify multiple things. Number one, we need to identify our entry. We need to identify our target. We need to identify where we're going to place our stop and risk that we're willing to take. Now, the stop and risk, those are together, but it's not the only thing you can do to control your risk. As I said, the other thing you can do to control risk is size, which is also risk, right? So if you want an acronym for this, actually put in the word sets, right? Sets would be stop, entry, target, size. It's an easy way to remember it. S-E-T-S. Stop, entry, target, size. Now, when we decide a size that we're willing to take, if it's possible, we could actually break up that size into multiple entries. Before we take a trade, we need to identify all of these things, but we also need to identify, is it a high quality opportunity? Not every position is something that we should be taking. Let me go back here, for instance, and bring up some of the trade ideas from the E-mini think tank. So let's see, I'll just go back to the active ones, 12.9 here. I'll bring that one up. Why not? Because I can. So what I mentioned before is before every class, I come up with trade ideas for the class. And you can see right here, these are actually all shorts we had on the 9th, which was our last session yesterday. So unfortunately, the silver got stopped out for a win. It hit a trail stop at 22.02. We had gotten in at the entry point at 22.15. So it made a small profit there. And we can take that as an example, or even the wheat trade, which I think came close to entry today. The other two actually did not get in because we ended up hitting entries or targets before entries. And then there was another page right here. This one, gold, actually hit the entry and hit its first target and then hit its stop. And copper, we got in. I haven't taken a look at the finish of that trade yet, so I might as well do that as well. Platinum, unfortunately, hit before class. We didn't get an entry there. So let's take, for instance, copper. I'll go over to copper for my charts here. This should be right there. Copper. And again, this was on a 15-minute time frame from yesterday, the 9th. So right here, there's the trade idea. Before we enter into the trade idea, we need to evaluate every position we take. Okay, really what we're looking for is several different things. Number one, we want to make sure, first of all, it's a qualified level. It's got to qualify. Now, one of the nice things about the program, the E-mini think tank, if you log into, let me see, I think I'm logged in. Find my browser somewhere. There I am. Oh, I'm not logged in, so let me do that real quick. But when you go into the program, it's not just the live trading sessions that we do, and I should say it's live data. We do it in a simulated mode for protection and legal reasons. But when you get into this program, there's also a lot of recorded education that you can kind of digest at your own pace. You don't have to necessarily be, slammed into a class and take everything all at once and try to absorb it all at once, because that's almost impossible. So if I go into my E-mini think tank program, here we go. Well, I got a lot of programs, as I mentioned before. So I go to my bonus materials, and the first thing I need to do is find out, okay, how to identify quality zones, right? So if I go to my bonus videos, I'll find that there are videos on trading routine and finding zones right there. I'll zoom in so you can see that a little better. There it is, trading routine and finding zones. In addition to the video, which you can watch, it's very easy to watch those, about an hour long, maybe a little less. But I can also go into the documents. Let me see if it's under fundamentals. Yep, right there. Brandon's leg-based zoning technique in my pre-trading routine. I also have documentation that's available to students to be able to just go in and learn how to find quality zones. So step one, we got to make sure it's a quality zone and it qualifies. So this is my zone. It does qualify. We have what's called drop-based drop. Next, once we identify that yes, it is a zone, not all zones are great trade opportunities. So we need to evaluate the entry and the position as a whole. Basically, well, I'll just say evaluate the entry zone as a step. We want to make sure that's a high quality opportunity. And also we want to make sure we evaluate the trend. Okay, is it in our favor? Do this. Or are we going counter trend? Counter trend trading is something you can definitely do, but it offers greater risk. So you got to decide whether or not you're feeling comfortable doing the counter trend trade, or if you only want to trade in the direction of the dominant trend. Number two, when it comes to that trend, you got to make sure it has room to run. Because if you are getting into the trend right as the point is ready to turn, you're going to lose money and get stopped out, or maybe not get any profits whatsoever, or it could just be very, very bad for you. So we want to make sure there's still opportunity in this trend to go in your favor. So we want to make sure that there's room to go, the trend's going in our favor, and we can even take a look at how strong the trend is. And that's something I teach when it comes to using some of the indicators like the RSI. Because if we have a very strong trend, then it's likely to move in our favor very quickly, and we're able to make profits very quickly, potentially. There's never any guarantees. So we want to make sure we evaluate the entry zone. We want to make sure we evaluate the trend. We also want to make sure we evaluate the target. And when we're evaluating the target, a couple things. One, we want to make sure it is where price likely to pause or reverse. You don't want to get out because you're scared. You want to get out so that way you maximize potential profits. So we want to evaluate that. And we also want to make sure it gives us a good enough reward to risk ratio. And make sure that the reward to risk ratio is proper. You do not need to be right all the time. You just need to be wrong very little. And let me show you an example of this. I'm going to bring up one of my trade worksheets here. Where did I put this? Oh, no, it's under, there it is. Okay, like I said, I was going through all the trade tracking. I track all the positions that we take in the E-mini think tank, and keep an eye on them to see if we're doing okay, but basically make sure I'm picking the right ideas at the right time, and if I need to make any improvements in my strategies. I always evaluate myself. And I want to bring this up right here. This is the month of September, and here's the reason why I want to bring this up. Okay, you'll notice didn't get a whole lot of trades. We got 5 winners, 3 losers. I'll zoom in a little more if we can. There we go. So again, we had 5 winners, 3 losers, 32 no trades, no entries. Basically what that means is prices never hit the entry point. I identified where I wanted to buy, identified where I wanted to sell. We just never got there for whatever reason. So I had to cancel the trade. But here's the kicker. Out of all those trades, there's 40 of them that were identified for the month. We only took 5. That means I was only right 12.82% of the time. Now, a lot of people think they have to be right all the time in order to make money in the markets, and that's not going to happen. Okay. I always joke, I say, I'm married, I'm never right. So, she's always right, I'm always wrong, and we're a happy couple. So, but when it comes to the markets, you can never be right all the time. It's just impossible to have that happen. So I want to make sure that if I'm wrong, I don't lose very much. And notice right here, out of the trades I took, I was right 62% of the time, 62.5 technically. But the key was right here. This is why I had so much success that month. I was profitable for the month because my average win was 1,700. I know I keep playing with the bow tie. Anyway, average win is 1,700, while the average loss was only 400. So the reward risk ratio was greater than 4 to 1. And it's a real bow tie, by the way. I tied it myself. I don't cheat. So the reward risk ratio is very good. And that's why if you have a very low win percentage, you can still be extremely profitable in the markets, because overall, if your losses are very small, but your winners are large, you don't need to be right 50% of the time, 60, 70, 80% of the time to make any money. You can be right, as I showed you, 12% of the time and still be profitable in the markets. And that's pretty cool. And that's one of the things that, again, we focus on in the E-mini think tank. So once more, if you're interested in joining us, all you have to do is click on that link that was just put up a few moments ago. We'll put it up again with the E-mini think tank. Let's see here. Click on that link there. Just show you what it shows you. Up there. I was trying to put the link back up. It didn't let me. What's going on there? Okay. There it is. Thank you. Anyway, you can scroll down and see that if you do enroll in the right here, it says register for E-mini Think Tank. If you go in for the quarterly, we'll actually give you a 2-week free trial. So we don't charge your card for the first 2 weeks. You get to try everything out. You get all the education, all the information, and you don't have to pay for it for the first 2 weeks. Then we charge your card unless you cancel. So it's a pretty cool program. But again, this is what you get. You get this information to help you find high quality opportunities and maintain a good reward risk ratio. Now, getting back to our lesson here, when we're looking at these trade ideas, we're evaluating our position. We have identified the size we want to take. So let's say we decided that we're going to take 10 micro contracts. We're going to protect ourselves. We're not going to take a huge amount of risk. We want to take some smaller amounts and perhaps micro, or actually, you know what? I was looking at copper. So do we have a micro copper? I know we have a full-size copper. I can never remember if there's a micro for that. Let's see here. Symbol. If I go into, I think it's XG. No, that's something else. We go here. Contains copper. I'll just look up the symbol. It's real easy. Futures. And it froze it up. There we go. Find. So there's copper. There's a mini copper, but I'm not sure about the volume on that. That's QC. There may not be one here for this. No, I didn't think so. The QC may not have the volume I need, unfortunately. I can try it. Let's do that. Yeah, that's what I was afraid of. Okay, so anyway, I'll just go back and we'll just say we're going to do 10 contracts. It was the, oh, what did I do here? Oh, that's why. Symbol HG3. Okay, now we're back. So on the 15-minute time frame, again, if I go back in time to where we're looking to get into this trade, we can evaluate these things. First of all, we take a look at the entry, or sorry, not the entry, but the origin of this move. And I can see that it's okay. It's got a nice big red candle, but there's no follow through there. Okay. Yeah. I was just saying 10 contracts as an example. Jim was asking, would you want to take a percentage of your account instead? The answer is absolutely yes. You can see right now, I've identified an entry for a short at 433 with a stop loss at 434. Okay. By the way, my decimals are weird on this platform. I don't know why. It should be 4.33, but they show it differently. It's not a big deal. But the risk, as you can see, is $350 per contract. So if I'm willing to risk more than $350, let's say I'm willing to risk, $1,000, I could take 2 contracts. Can't take 3. It's a little too much. Let's say I'm willing to risk $1,050. That's 3 contracts. Okay, so let's just do 3. But yes, you're absolutely correct. If I identify, I should really be doing a percentage of my account. And when it comes to professionals typically don't risk more than 2 to 3% of the cash in their account. So pros risk less than 2 to 3% of the total value of their account in any one trade. So, why should you be taking more risk, right? Pros are taking little risk. You should be taking a little risk. So therefore, if you're taking $1,000, your account should be much, much bigger, right? So what are we looking at? About $50,000 there? Let's see, $50,000 in your account times 0.02 is $1,000, right? So if you had a $50,000 account, you could go a little bit higher and do the 1,050. So now we got 3 contracts available to us because again, each contract is $350 of risk times those 3 contracts. We're looking at 1,050, as I mentioned. So we're staying within that range. I used to be a hedge fund trader and also worked at a brokerage in what they called an agency desk operator capacity. So as an agency desk operator, I was handling the order flow for major institutions and also the customers at the brokerage. So yeah, I got to see some of the professional trading and the way they handle it. And I've got friends that have been doing this too in the business. So I've talked to traders to find out what they do as well. Anyway, looking at this, if I'm willing to risk 1,050, we're going to take 3 contracts. That doesn't mean I have to take all that risk all at once. So when we evaluate this position to see, is this a high quality entry point? I look at it and I see, well, we've got a lot of movement to the downside. But, and by the way, these evaluations, I do bonus sessions for the E-mini think tank. And in one of the bonus sessions, I did something called evaluating your positions or evaluating the trades. And you can actually learn more about that evaluation. I'm not going to go through all the steps right now. But one of the steps is, how good is this entry point? You take a look at the height of the zone right there, and you can see that when we left this area, oops, see if I can grab it and move it. Oh, I'll just do it this way. Duplicate. There we go. There's one time the height of the move. And if I duplicate it again, there's 2 times the height of the move. You can see that we pretty much had nothing but selling pressure, although it pulled back a little bit at the end, but we had a lot of selling pressure coming out, at least twice the height of the zone. That shows it's a really good imbalance and very strong of an area. So I can also look to see, was there a breakout of a prior area? Was there plenty of room to go? Is the trend in my favor? And I kind of rate the trade. So there's 2 things I can do. One, if I see this as a very high quality trade, I can go all in. So if we enter, and I was going back to my drawing here for a moment, if we enter and we decide that this is a really great opportunity, I want to get in right away, I can enter with a limit order right at the bottom of my supply zone, or if I'm trading a demand zone for a long, I can simply put in a limit order right away when I want to get in at the beginning of that zone. So this would be a limit sell, or in this case down here, this would be a limit buy. Now, the problem with this is we're taking on the most amount of risk, right? Because remember, if we're looking at our stop losses, we got to place our stop loss beyond the zone, either above if we're going short or below if we're going long. So the advantage to this limit order to get in is that we can set it up right away. We don't have to wait for it. We don't have to worry about it. Just set it up and be done with it. The drawback is we have the least amount of confirmation or confidence that the zone's actually working. We only do this when we feel really comfortable about the position that's likely to work. Because you can see when I draw out these lines here, let's do it that way, that we are the furthest away from our stop and still in that zone. So we have the most amount of potential risk. So if we can't control our risk because we're getting in very far away, we can control it by using size. So in this case, if I want to reduce my risk, I take a small portion of the trade rather than jumping in with the full amount. So we had already talked about this and we decided that, okay, the size in this short on copper was going to be 3 contracts because that was enough that I can get in, but stay under my, it was about 2.1% of my account size, right? If I had a $50,000 account, I can risk $1,050, no problem. But we don't have to take it all at once. It's like going to a swimming pool. If you want to, you can dip your toe in the water to feel how cold the water might be and whether or not you want to jump in all together or you want to kind of, maybe ease your way in. So instead, with the limit order, you can enter with 1. So that way we have limited risk. If things goes bad and go against us because we got in, say here, we're looking to sell. So maybe we were getting ready to get in and we get in and prices keep going and end up stopping us out. That's okay. We only lost with 1 contract, $350, rather than 3 contracts with $1,050. Now we can scale in on this position because if things start to turn around while we're in the zone, so instead of that, where it went right through, instead we go in with 1 contract, and now we start to see prices are reversing inside of the zone. Now, what we can do to kind of fine tune our entry, if you choose to, is drop down to a smaller time frame. So let's go back to that copper trade. Oops, it was right there. And let's move forward here. I'd identified all the pieces of the trade, and there's the entry point. So here we are getting ready to get in. And if we had a proximal entry, we would have gotten in right there at 433, which is the entry point. And you could see that it actually moved down and went back in the zone just to make you a little nervous. So obviously, if you got in right away as we hit that zone, you had the most amount of risk because you could see you are furthest away inside that zone from your target. I'm sorry, your stop, not your target. You also get the least amount of reward because you're closer to your target. So instead, right here, which is about the 9th at 12:30, let me put in a vertical line there so I don't lose track of it. As we go into the zone, either here where we initially got in or over here, we can try to time our entry with another contract. And that way, again, when we get in with one, if it goes straight up, we only lost on one contract. But now as it goes into our zone, I happen to be on a 15-minute chart. I could drop down to a 3-minute time frame. And you can see, unfortunately, the first one didn't really help me here. That's the entry. But now look what happens as we go into the zone. Instead of entering like I did at the bottom of the zone, oh, come on. See if this works. There we go. Just want to get rid of the vertical line. Now what we can do is enter up here. And the reason why is I've gone down to a 3-minute time frame. Basically, you take whatever time frame you're trading on, divide it by 4, 5, or 6. 5 is the optimal time to divide everything by because that's the time frame that most charts are related by is a factor of 5. It's the best relationship. So again, our first entry was just entering with a limit order. The second entry is we wait to see prices turning around inside of the zone. And if we wait to see them turning around inside the zone, I call that a zone entry. And that can be for a short or for a long, doesn't matter. And what you're doing is basically getting in as prices are turning inside of the zone. And you're actually seeing prices turn around. So for a short, what I'm going to look for is that prices are making lower highs and lower lows on individual candles. So literally right here, as I go forward again, that would have been my entry because we had that green candle that formed after this red one. And on this red candle, we made a high that was equal to the previous high, made a low. The next green candle there, though, made a lower low. That would have been the trigger to actually get in. Probably could have gotten in on the open of that candle, open of that green candle right there. That would have been your trigger and your entry. Well, let me draw it right there. And the reason why is we've made a lower high and lower low. We don't know what else is going to happen afterwards, but the fact is that we are seeing weakness now inside of the zone. So if we were going to go long, obviously you'd be looking for the higher lows and higher highs on candles. So let's say that this was a zone, hypothetically right here, and we're inside the zone. Let's draw something out. Okay, so there's my zone. Here's price going into the zone, lower highs. Oops. Actually, let's do it this way. So I don't want that to be part of the zone. There we go. And right here, we have a low, higher low, and finally a higher high. So that's our trigger to get into the trade. And we actually have confirmation it's turning around. And of course, it continues to blast to the upside afterwards. So that's what I'm really doing. I'm just going down to that lower time frame and trying to fine tune the entry here where I see prices are actually using this area and turning around. So now I've increased my risk because I've added an additional contract. But what I've also done is increase my potential reward because now my cost basis is a little bit different, isn't it? I've gotten in one down here at 433, but my second contract was entered at 433.20. So now I have a higher cost basis of 433.1, which means when we reach the target, I make a little bit more money. And because I've only done 2 contracts, not 3, I still don't have maximum risk. I'm only risking 700 out of the possible 1,050 that I'm allowing myself to risk. So I'm scaling into this position to minimize risk. The last entry would be you get in as soon as prices are leaving the zone. Let's see, is this too thick? Let me see. No, it's fine. So here we're getting in now as prices leave the zone, and you can do a stop limit order as prices are leaving that zone. So what a lot of people will do is put in a stop price, maybe a tick below, there we go, with the limit price below that. It's up to you how you want to handle this. But you can do this is really called a confirmation entry, because you're getting confirmation the zone's working. There we go. So confirmation entry on this side would be the same. You'd be waiting with a stop order as it leaves the zone, and then a limit order above, doesn't be that high, to catch price as it leaves. A confirmation entry. Same thing on both sides. And what you're doing now is getting confirmation that the price is leaving the zone. So in this case, we're entering right here at 433 because prices are leaving the zone. So you put in your stop price basically at one tick below your zone or above if you're buying. And then your stop price, or sorry, your limit price should be a few ticks beyond that. So if I were to put in an order bar here, for instance, if I want to sell at this level, click on sell. And right here, I do stop with limit. My stop price would be at or below 432.95. Now, why did I do 33? Because I want to see it actually leaving the zone. So I know the zone's working. I have increased my risk a little bit. You'll notice I'm further away from my stop, but I've got confirmation the zone's actually working, it's holding. And then my limit order, I usually put about 3 ticks below, maybe 4. It's up to you how much you want to chase. The limit's there so you don't chase price in case this is a very fast move, but you're getting confirmation that the zone is working. Okay. And again, I could do this back, not even on this time frame. I can go back and do this on my trading time frame, which has the 15 minutes. So if I go back to 15, again, we catch it as it leaves the zone. And this trade, speaking of, let's see how it did, because I didn't put in the entry was around noon right here. And you can see, look at that, it went to target 1. And unfortunately, then got stopped out. So hit target 1. And then the stop out. So I got to see where the stop was. We actually have rules on our stop losses as well. Now, here's the nice thing about this. You'll notice when I went into this trade, okay, when I was putting the trade out, first of all, posting it, number 1, I have my entry area, my zone, stop loss identified. So we have our risk identified. We know exactly worst case scenario, how much we're going to lose if we're wrong. And we can control that based on the number of contracts we take. Or if we don't feel comfortable with the trade, you don't have to take it. You know, not all the trades work out. I wish they did, but they don't. It's life. So you take the ones you feel comfortable taking, obviously. And then you'll notice I always have 2 targets. The reason why I like to have multiple targets is psychology. It's based in psychology. What happens with most people is when they get into a position, it doesn't matter if they're buying or selling. Okay. Once you get into a position, again, it could have gone in one of 3 ways here for the entries. Could have been limit, could have been confirmation, could have been the zone entry. Once you're in a position, you are worried about where to exit. I mean, you really are. If you bought to get in, you're a worried seller. Are you going to sell too soon? Are you going to sell too late? What's going to happen? If you shorted and sold and you're a worried buyer because you need to know, do I get in? When do I get out? So people get very, very nervous when it comes to the trading, obviously. Just want to check something here. Okay, make sure everybody's still with me. Cool. Everybody's so quiet. So basically, everybody's really worried about when to get out, too soon or too late. The nice thing is if you can have multiple targets, you can get paid for your work. As soon as you receive some profits for your work that you've done and move your stop, perhaps to break even or even a little extra, now you get to relax. It's almost like going to a casino. And I joke about this, but it really does. It's the same kind of psychology. If you go to a casino and you bet let's say you take $100 out of your pocket and you put it down on blackjack and you win your very first hand. Smartest thing to do would probably walk away altogether, but most people aren't going to do that. You're there for fun, entertainment. Okay. And then, let's see, Rob is advised. Yeah, no, again, I was looking at swing trades. It's not necessarily a day trade. So it has nothing to do with the time of day. So yes, if this was a small or slower time of day, it really didn't matter. You could advise, I mean, you could definitely not take the trade because of the time of day. It's up to you. Yeah, use 15-minute bars, not a 5. It's up to you what time frame you want to take. Honestly, there's trades available on all different time frames. And good morning from Bellevue. Nice to see you there, John. Anyway, getting back to my casino analogy, what it comes down to is if I take $100, I throw it down the blackjack table and I win, I can take my first $100 and put it back in my pocket. Now I'm playing with the house money, right? It's the money I won. It's not the money I came with. It's not my money. I mean, technically it is, but it's house money and I'm going to be more relaxed and maybe have some fun. The same kind of concept happens here. Here I've identified where I want to get in for that short position. But once I can move down and take some profits at my first target, I've already booked profits. The rest is just extra money that I'm getting, and I'm more likely to be relaxed and allow my winners to run. You know, when you get a pullback, let's see, do I have one that hit 2 targets here? Let's take a look back. Oh, gold, the gold trade. Yeah. So on the gold trade, there it is. This is again on the 15-minute chart, 1783. There it is. So this happened to be, again, a 15-minute time frame. I identified an area of supply here. We ended up hitting that supply at 9:30 in the morning, basically when the session opened yesterday. So it was very quick. So great question. After the first target is hit, do I move your stop at or above break even? I have rules for that. What is your risk tolerance? What if you only can take one contract? Then you obviously cannot scale. That's it. You just can't scale. You just got to make sure you only take high quality trades, period. But if you can, a lot of these securities have minis and micros, right? So for instance, gold, this was a trade that I identified. And right there, you can see gold entry. This was a $200 risk for this particular trade. However, in this case, if you can only take one gold contract, you could actually take multiple micro golds, right? Take that gold GC, and instead, now we go MGC, right? And that's micro gold. And what are we looking at? February. So that's 2022-02. And you'll see the chart is pretty much identical. Well, I'll keep the moving averages there for a moment, but here's your zone. Same zone that we saw on gold. But now for the risk, instead of $200, I forget what the stop was. Let me just figure it out. 83.2. There we go. And the stop was 85.2. So let me see if that's the same. There you are. Now the risk is $20. So what does that mean? Instead of one gold contract, I can take 10 micros. There you go. Now, once again, not every single one will be the same. Not every security has a micro version of it, but there are enough of them out there that that's what you do. You just switch to a different type of contract. That's why I said type of contract. So looking at the gold, well, I'll just use this micro as an example. That was entry. Target number 1 is 1774. You see 1774.3. I like to use the same colors for all that. There we go. And then target 2. Had it. Was 68.8. There we go. And this program's pretty cool. Been using it for a little while. It's called Omega Charts. So if you're interested in getting the program, let me just show you. Hang on. Just move that over. Okay. Oof. This is. There it is. So you check out the program here if you like. But anyway, the nice thing about this is really easy for me to figure out how much I'm going to make or lose. I just click on that tool, 74.3, and draw it up, 83.2. There it is. And then next one, 68.8. Through 2. There we go. So I'm going to risk $20 to make 89 or $144. Now, as we're evaluating this, you can see it's a pretty good move to the downside, and we broke out some prior lows, so a pretty strong area there. If I were to go to my higher time frame, 60-minute chart, I can see that right now my trend is pretty bearish. We've been making some fresh lows. We didn't break out of that prior low yet, but it's looking pretty bearish altogether. And I can even look at the bigger time frame to see if there's anything that's going to be in my way for continuing to the downside. So if I go out to the 4-hour chart and look at this gold, I can see, there's a little bit of buying pressure comes in right here. So that may be a bit of a stumbling block for me to be able to get to target number 2. We have a little drop base rally, actually. Oops, wrong button. What is that? I'm going to change the color so I know. Go back down to my 15-minute. So I have a bit of a problem here with this trade where target number 2 may not be achievable because we have that higher time frame wall in the way that could cause the price to reverse. Wouldn't help if using options? No, because the premium is going to be different. You got to use what are called price slices for options. Yeah, but I'm talking about trading the physical security, not the underlying security, not the options right now. Although you could scale in with options too, with number of contracts. So scaling in and out in this case, number 1, prices come into our zone. If we are feeling very confident, we just do a limit entry with 100% of our position. If we're not as confident and we want to minimize our risk, we can decide to maybe only enter with 3 contracts. So at the limit entry, I do 3 contracts. Basically, we're doing the micros here, right? So I do 3 contracts. Oh, you know what? Let's shrink that text down a little bit so we can see it better. There we go. I can go a little more. It's warm in here today. I turn my AC down more. It's the bow tie. So anyway, there we go. So that's 1 entry. And now we have a small amount of risk. Well, I'm in South Florida, so I know I'm rubbing it in, right? It's, I don't know what it is right now, temperature wise. Tell you in a minute. 81. Nice day out. I'm going to go out after this for a little bit. I think might be higher. I don't know. Oh, 82. It just got higher. Anyway, so right there is number 1. Now for number 2, what I could do is go from this 15-minute chart, as I did before, down to a 3-minute chart. 52 degrees. That's not too cold. It's not bad. It could be worse. I know people that are freezing, below freezing. Anyway, we go down to a 3-minute chart, and unfortunately, this just went in and never really gave us any signal to get in while it was in the zone, unless it went higher. Nope, it didn't. So basically, right there, you could have gotten in. If you saw the wick forming, because this was a large green candle and started falling down, you could have taken your trigger there if you wanted to. Typically, though, I'm looking for lower high and lower low. So in this case, the only other thing I could have done was take my entry as it left the zone. This was a limit entry for 3 contracts. And then for the other 6, I would have done confirmation entry. Oops, wrong button. But you get the idea. So I could scale into the position to limit my risk. So confirmation entry. No, I'm sorry, 7 contracts. So now we have the full 10 position. That's it. We're in. Now, you got to have some sort of rules for risk management. It's up to you how you want to do it. But the rules that I have for my risk management is I will not usually touch my stop loss until I'm halfway to my first target. So I will generally set an alert. Okay, warm. There we go. See, it was a real tie. Getting cozy here. Put a collar extender on because of my neck. So anyway, So what we do is we got our full entry in. As prices get halfway to my first target, then I move my stop to break even, typically. So like I said, I do everything rule-based. That way I'm not trading on emotions. I'm simply following my rules. So let me adjust the font again. Oh, no, it is. Put it at 20. So it doesn't matter how many targets I have. Once price gets halfway to target one, I adjust my stop to break even. I don't worry about commissions or anything like that. I just put it right where I got in. Okay, so if I got in a little bit better price or worse price, I just make it wherever it is. So whatever my average cost is for the position. And it depends on your platform, depending on where it is. The target needs to be at least twice the height of the stop. Most of my targets are at least 2 to 3 times the height of the stop. Otherwise, I won't take the trade. That's part of my evaluation. I strive for positions. Now, again, it comes down to my win-loss ratio. If my win-loss ratio on the trades I take is less than 50%, then I will not take trades unless I have a 3-to-1 reward to risk. I'll write that down because that's kind of a lot. Okay, so if the win-loss ratio of taken trades is less than 50%, and you're struggling a little bit, right? Only take trades where the reward risk ratio is 3-to-1 or greater. Okay. So if you're not doing more than 50% winners on your trades, typically don't go for less than 3-to-1. That way, again, you don't have to be right all the time because your winners will take care of your losers. You can be right 25% of the time with that and still make money on average. Not every trade is going to be the same amount of risk or same amount of reward. Now, if your win-loss ratio is greater than 50%, really, it needs to be a lot greater than that, to be honest with you. But if the win-loss ratio of trades is greater, should be than, not then, then I can't spell today. You can take trades with the reward risk ratio of 2-to-1 or greater. I keep doing that. Edit. Just want to make sure my notes are correct here. It's less than 50%. Okay. So there you go. If your win-loss ratio of taking trades is greater than 50%, then you can take trades with a reward risk ratio of 2-to-1 or greater. So you don't want to go less than 2-to-1, really. 1-to-1 trades, if you're doing 70, 80% or more win-loss ratio, then yeah, you can get away with that. But honestly, it's not a smart thing to do. So again, once I get halfway to my first target, I'll adjust my stop to break even for my trade. So here we got into the trade on gold. Next thing we know, woo, price just dropped, right? So now it's more than halfway. So the stop loss, which was initially up there, fix that. Let's use bright red for that. There you go. So we had a good reward risk ratio. Everything worked out. Now we can move our stop down to break even. Okay, depending on where that happens to be. And then what I do is I use moving averages as a trail stop. So it's up to you how you want to do this. You know, there's not a right or a wrong way. It's whatever works best for you. So for me now, I'll exit number 1 at targets, right? Or number 2 at Walmart. No, just kidding. Now we'll enter number 1 when we hit our targets, or number 2, if price closes beyond the 8-period exponential moving average on the trend time frame, which is my intermediate time frame. I always use multiple time frames. So whatever time frame I'm identifying the trend on, that's where I'm applying the moving average. He left a Walmart comment. Yeah, I say it every time. So if I hear I roll sometimes. Or number 3, and I'll explain all this. If price breaks the 13 EMA on the trend time frame, which again is that intermediate time frame. That's it. So that's why you're seeing those 2 moving averages on my chart right now. Actually, it's 8 and 21 right here. So let me just adjust. Yeah, you can set these up automatically if you want to, depending on the platform you're trading on. It's easy to do on many platforms. 15. There we go. So basically, now what will happen is there we are, moved halfway to our first target, which is right here in that darker purple. So I'll switch my chart from this 15-minute to an hourly chart. And that's the trend time frame that I'm focused on, right? So I'm going to stay short unless we close beyond the 8. In this case, because we're short, I need to close above the 8 that will exit me. Or if we simply break the 13. Okay. Let me get these out of the way too. So looking at the trade here, you can see there was the entry. We've already moved halfway to the target. And now I'll get out either when we hit the target or if we either close above the 8 or breach the 13 on this trend time frame. So you can see we closed right at the 8, but didn't close above it. So that's okay, because stay in there. Unfortunately, on the next candle here, it opened up, there it breached the 13, and that would have been your exit for the second contract. So the first contract, it actually got out because it went down about 1 tick away from the target, and we saw that and got out before it bounced. But then the second target was never achieved. Remember, once you get some profit, you're going to be much more comfortable letting your winners run. Right here, that's a pretty big green candle. And if you hadn't taken any profits at all and you see that big green candle forming, could you imagine how nervous you're going to be in your market and your trading? So by taking some profits along the way at an abbreviated target, I can lock in some profits and let those winners run. And yeah, you can actually set this up to automate for you. So you just walk away from your computer and let the computer do all the work for you. No emotions, right? The computer doesn't care. You often regret not taking all off at the first target. Well, you can't regret if you make some profits, obviously. Yeah, could I have made more? Sure. If I'd taken it all off at the first target, I would have gotten out much, much better than up here. That's where the second target took us out, about 1781. As a matter of fact, what does it show on the trade? Target hit 1774.4. The second was 1779.5 for the trail stop that we had. And the reason why is I actually use a different combination than this. But you can see it breached the moving average. Okay, so I use a variation on this. But that's it. If you're long, you stay long unless you either close below the 8 or break the 13. And there it broke the 13. So it's a very simple rule, but very effective. And that allows me to minimize my risk by scaling in and scaling out of positions. And you can see overall, we do not have to be right all the time. As a matter of fact, we can be right very little, 12%. Okay. Yeah, I always do it on the intermediate time frame. So if I'm trading on a 15-minute chart, I go to the hourly. If I'm trading on a daily, I'd go to the weekly. Or if I'm on a 4-hour, I would go to the daily. So it's whatever my intermediate time frame trend is. But that's the way you have success in the markets, by managing that risk and reward. You can see here in August, the risk was $482 on average per trade, but we had almost a 3-to-1 reward to risk ratio with the average win at $1,200. Now, what saved me was that instead of 12%, I had 21% right for the month. And that's why I made a little bit more money. So if you're interested in joining us, once again, we'll put up the link for the E-mini think tank here. And you can see that, like I said, I was kind of tallying everything up. This is just showing 2021. Oh, that's Wealth and Spreads program. No, it's not. This is E-mini think tank. I just didn't change the title over. Keep forgetting. E-mini think tank trade tracking. So these are the trades that I had identified in the class: entry, target, stop, just like you see right here. And what I did is every single month I tally up all those trades to see how we did. And you can see historically it's done pretty well. There's a lot of trades that get identified. Many of them are never entered because they just do not meet the criteria for entry. But those that do get entered, we end up doing pretty well. Take a look at January. That was probably one of the best reward risk ratios. 2,600 for the average win, only 585 for the average loss. It slipped a little bit last month. 1,100 for the average win, and a little over half. So it's not even quite 2-to-1 reward to risk ratio, but our win ratio was one of the higher ones for the months. Therefore, it worked out pretty well. And these are designed for somebody who has about a $15,000 account to be able to take all the trades. Some of these are overnight trades. Some of them are intraday trades. When you go take a look at the records here, the trades that we've taken, we've got some 15-minute intraday opportunities, others 60-minute swing trade opportunities, VIX or the wheat trade, which I don't know if that hit. It was very close today. I don't know if it actually hit or not. There's wheat. And boy, was that close. It didn't get in. High here was 788. I was looking at 788 and 2/8 or a quarter. So it missed me by one tick. Oh, well, is what it is. But that's what we do. We identify these high probability opportunities and take the trades when they come into play. So for instance, heating oil, 60-minute chart. Unfortunately, none of those got entered. It hit other zones. Soybeans, again, 60-minute or 4-hour, or some of these are 15-minute timeframes. Some of them lose, but we can maintain small losses compared to the potential gains in those individual trades. So I'd love to have you in the program. And overall, we've been doing very, very well, as you can see, for the year. And we got one more month to go. Haven't had a negative month yet. So hopefully that, knock on wood, that continues. And if you're interested in joining us, all you have to do is click on the link, and then you can go out and you'll see the subscription page. Where did I put it here? Oh, that's not the subscription page, but this is the actual page that you can in the joining. And if you decide you want to do a quarterly subscription, you'll actually get access to all this material, the bonus material. You can see the tracking for the trades. I make it public to everybody. So we're going to switch that over to November. So that way you can see each individual trade gets recorded. As a matter of fact, let me show you. It's under Microsoft Excel. It's a new file. And where's E-mini? Oops, I was looking at the Wealth with Spreads one. So E-mini think tank, there we go. Yeah, we take a look at November. So that's the newest one. And for the month of November, I just showed you the numbers earlier, but you can see each individual trade is identified and recorded as well. And like I said, unfortunately, a lot of them are no entries, but each one of those trade ideas was on a PowerPoint offered to all the students before the class, or as the class begins, before the trades were actually coming into the entry area. They are traded in a simulated account for legal reasons, and it's real-time data that we use. So some of them are losers, many of them are winners, which is obviously good. And I try to maintain small losses in comparison to the gains that are taken in the trades. So does anybody have any other questions? Oh, right there. How would you decide on whether or not you want to do the mini option or a cash flow with verticals? It depends on what type of trader you want to be. The other program that you're mentioning, it's that one's a day trading on options. It doesn't have nearly the same size profits, but it doesn't have nearly the same size of capital required either. So if you're limited in your capital and you want to be able to take more trades, then you may be interested in that other program. If you're not quite sure, you can always email us and get some more information. You can go ahead and contact us at support@wealthbuildershq.com. So if you have more questions, you can ask there. And maybe we can talk to you a little bit more and get you the right one. So support@wealthbuildershq.com. There you go. But basically what we're talking about today is the E-mini think tank program, as I mentioned here, and you get all these bonus videos. Every class that we do is also recorded and held for about a month. So you can go back and see how some of those classes went and what we were talking about in the class. There's bonus sessions of education pieces, and I mentioned that. You get access to all that in the demo as well if you want to for the first 2 weeks. So when you click on the link, the E-mini think tank, what you'll see when you go into the enrollment page, or just basically at the bottom of the screen, If you do the quarterly subscription, you'll get 2 weeks free. We just don't charge your card because we don't have to worry about chargebacks and things like that. So you basically get to try everything out, 100% access to everything for 2 weeks. If you decide you don't like it, just let us know. If you enjoy it and it's working out well for you, then you continue on in the program. Or if you just want to try it out for a month, you just go ahead and do the 1 month for $3.99 as well. It's up to you. And let's see, is there a discount on e-mini that's going on the regular price? Email us. If you've been a previous student of ours and you discontinued, go ahead and talk to us at support. We'll see what we can do for you. Yeah, so definitely talk to support at wealthbuildershq.com. Any other questions? Because come up on the top of the hour here and it's about 82 degrees out and I'd like to relax a little bit for the rest of the day. Actually, I've got my spreads I got to look at pretty soon. So that program. I wish I could just relax for the rest of the day. I got some more work to do. But I want to thank everybody for being here. And hopefully I'll see you in the E-mini Think Tank program coming up. And hopefully got a little bit of information about how to manage your trades a little bit more. You can watch this video again. It'll be available on the YouTube channel for the Wealth Builders HQ. You can just go out to YouTube. Let's see if I can find it pretty quick. I should be subscribed to it anyway, but if I weren't, all you'd have to do is under search. You missed everything. Oh no, Steve. Well, again, Wealth Builders HQ on YouTube. This will be recorded and put there. And you can see right there, Trading Coaches Playbook, scaling out. We're live right now. If I click on that, oh boy, that'd be kind of a weird loop, right? Watching it live. But you can go in under Wealth Builders HQ, and I am subscribed. And if you go into the videos, you'll see the previous sessions as well. But this one will also be available for you on the YouTube channel. You can also, I think, go into playlists. Yep. And you should be able to find, yep, there it is, Trading Coaches Playbook, view playlist. You need Lucky Charms and a nifty bow tie. There you go. I love my bow ties. I got a lot of them. So there's great videos there. It's not just me, but you also got how to read candlesticks with Ryan Litchfield. You got Tony Benson, who's done a couple of these as well. So right there, managing your trade risk. That's one that I did a while ago for about an hour and 19 minutes. So anyway, you can see that there's a lot of great videos there. I use Fibonacci and trading and a few others. So if you want to get more education, more information, it's right there. If you missed out on anything we talked about today, it's going to be in there as well. So you can go ahead and rewatch this video as many times as you like. So with that, I want to bid you adieu. Unless there's any additional questions, I want to thank you for being here, and hopefully I'll see you in the E-mini Think Tank soon.